In 2015, Curtis 50 Cent Jackson, a mogul synonymous with immense wealth, made headlines for an unexpected reason, filing for Chapter 11 bankruptcy. This announcement, however, was immediately overshadowed by a series of his own Instagram posts, featuring him surrounded by stacks of cash, arranged in various provocative displays. For many, this presented a jarring paradox. How could a man claiming insolvency simultaneously flaunt such undeniable opulence? This apparent contradiction sparked public bewilderment and ignited a deeper investigation into the true nature of his financial state, prompting questions about intent and perception. What lay beneath the surface of this audacious display? Before this perplexing episode, 50 Cent had carved out an extraordinary path to prosperity. Rising from humble beginnings, his explosive music career provided the bedrock for an empire that expanded far beyond hip-hop. He wasn't content merely making records, he was an entrepreneur with a keen eye for opportunity. Through astute investments and shrewd business deals, independent reports indicate he built a formidable fortune estimated at $300 million. This initial success established him as one of hip-hop's most financially savvy figures, a testament to his ambition and business acumen that defied conventional expectations for a recording artist. A cornerstone of 50 Cent's burgeoning fortune was his groundbreaking partnership with Vitamin Water. In 2004, he struck a deal that saw him acquire a minority stake in the company, Glaceau, in exchange for endorsing their product, Formula 50. When Coca-Cola acquired Glaceau for $4.1 billion in 2007, 50 Cent's stake, reportedly valued at $100 million at the time, represented a colossal windfall. This single, prescient investment showcased his unparalleled ability to identify and capitalize on opportunities beyond the music industry, cementing his reputation as a formidable business magnate and diversifying his substantial wealth. The trajectory of this empire, however, faced a severe challenge in 2015. A New York jury delivered a $7 million judgment against 50 Cent in a widely publicized invasion of privacy lawsuit. This wasn't merely a legal setback, it was an immediate and substantial financial threat, obligating him to pay a significant sum. Faced with this impending liability, the rapper and businessman found himself at a critical juncture, needing to devise a strategy to mitigate the impact of this judgment on his extensive, yet intricately structured, personal and corporate assets. The stakes were undeniably high, demanding a calculated response. It was against this backdrop of legal jeopardy that 50 Cent filed for Chapter 11 bankruptcy. Legal experts observed this move as a clear, strategic maneuver designed to restructure his debts and, crucially, to halt enforcement of the $7 million judgment. While many perceived bankruptcy as a sign of complete financial ruin, analysts noted that his filing coincided directly with the pending court payments, suggesting a carefully timed tactical decision. The Instagram posts of cash, rather than undermining his claim, were interpreted by some as a bold, if unconventional, part of this broader legal strategy, a defiant demonstration of control. Financial commentators and legal scholars widely acknowledge that 50 Cent understood money not as an inert asset to be hoarded, but as a dynamic tool. For him, wealth was a means to manipulate circumstances, restructure obligations, and ultimately, rebuild his financial standing. This perspective diverged sharply from conventional understandings of fiscal responsibility. It suggested a sophisticated understanding of legal and financial systems, where the appearance of insolvency could be leveraged to gain leverage, protect assets, and navigate complex liabilities, rather than signifying an actual lack of resources. This approach highlighted a unique wealth psychology. Indeed, the narrative quickly shifted from financial downfall to strategic resurgence. Within a remarkably short period following his bankruptcy filing, financial analysts began to report a quiet, yet undeniable, climb in 50 Cent's net worth. Reports indicated his fortune had rebounded to over $40 million within years. This rapid recovery underscored the effectiveness of his calculated bankruptcy strategy. It demonstrated how, even after public declarations of insolvency, a well-executed plan can lead to significant financial restoration, often unnoticed by casual observers focused solely on the initial headlines of his legal troubles. Ultimately, 50 Cent's financial saga stands as far more than a cautionary tale of celebrity excess. Instead, it has been widely cited by financial commentators as a masterclass. It illuminates a profound understanding of wealth psychology, demonstrating how perception can be managed to achieve strategic legal advantages. It's a vivid illustration of legal maneuvering, utilizing the intricacies of bankruptcy law as a powerful defensive and restructuring tool. Most importantly, it starkly reveals the critical difference between being broke on paper, a legal status, and being genuinely broke in reality, a distinction often lost in public discourse.